Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Hey, Stephen, how are you? How's our audio? How about in the Trader Lab community? Okay, thanks, Stephen. I don't know if we're okay in Discord. Maybe you can confirm that. Good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. I would like to confirm that there's audio in the Discord. Yeah, I just want to confirm there on Discord. I'm not getting any response out there at the moment. So maybe there's an audio issue. Anyway, thanks everybody for visiting today. Let's get into it. Take care of business. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only and is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. Let's get into it. Interesting day. For me, not the clearest day to trade, but that's okay. That's trading. So I'm going to go over the opening sequence for me, how I interpreted the market, and kind of what I had to do about it. I started out on the long side, and part of that has to do with statistics. Now, there's another thing about this. When we have a big day up like yesterday, there's always a lot of possibilities, but at least two, right? And when you have a day like yesterday, it's a possibility to have an inside day. That's one part. And I put this in the Trader Lab. And the other part is to maybe test yesterday's high and then come back inside. So, or you can just have what's called a neutral day, whereas we stay inside and both sides are active and we consolidate. So all of these things are possible. So when we opened this morning, we opened higher, I believe. Let me just confirm that. Seems like a long time ago. Let me just look. Yeah, higher. That means above settlement inside yesterday's range. That sets up statistics that lean somewhat to the upside, especially for the ETH high, has about a 69% probability. So it was kind of a mixed bag for me, but I have to kind of just go with what I see when the market starts out. So that's what we're going to look at today. And I'm not saying, there's other traders in Trader Lab that are going to be doing the exact opposite of what I do. And it doesn't matter because in trading, in reality, it's always random. And you just kind of take your best, and I'm going to say guess, and you try to use statistics. Now, there's a couple pieces about this. So we have a couple of things here. A 69% probability we get there. And 80, let me give it to you. Previous high. taking out the previous high or low is about an 81, 82% probability. Considering I'm opening here, and here's yesterday's high, I was looking for it. One second, guys. Trying to see what's going on here. Do you guys have audio now in Discord? Okay, great. All right, super. High tech. So let's get into the RTH Open. So I'm going to explain what I did. And again, I'm not saying this is the end all be all of what anybody else should do. I just follow a plan and I accept the random outcome. So I know statistically I have a high probability here. I also know, and this is part of the joy, that I have a high probability of going here, here, and here. So what do you do first, right? Well, for me, I have to look and see who takes control first and then try to get an alignment and then aim for statistics. So the fact we opened here, we have the ETH volume point of control. That is the highest volume price has an 82% probability. The overnight mid, a 72% probability. Yesterday's highest volume price, it's called the naked volume point of control, about a 67% probability. So I'm opening here and then settlement. So I have attractors down here and I have an attractor up here and I have yesterday's high. So it's really kind of you flip your coin in the sense. So the way I try to do this is I try to see who takes control and then take that as my opening volley, and then whatever happens, happens. So now let's get into the RTH Open. So we get our open, and I am looking on the long side. I see the buyers here. Now there's two things that can happen in here. Obviously, well, it's up or down, but besides that, after a day like yesterday, the market is long, and I always say the market goes up to go down and goes down to go up. So what I'm thinking about is, well, the market goes up, maybe we'll get here, and then, or we can get what's called responsive selling, and then the longs in here and the sell stops under the market become the fuel to take us lower. One moment. So that's what I know. The rest I don't know. So now it's structured trades. So let's go take a look. RTH Open is here. I have my targeting and I have my targeting. I know I have a high probability of taking out either yesterday's high or low. So all good. So whatever. All right. So here I see my open. I see my buyers. Okay. So right here I'm saying, okay, buyers are aggressive. So now let's watch. So I have micro high volume structure here, right there. This is the retail price. This is called developing volume point of control. And we have structured trades that are built around the valuation of the market in all time frames and fractals. Right here was microstructure. I'm going to label these for you so you can follow them. And they're based on consolidations. All a consolidation is the same thing this is, except this is developing time frame. This is the micro time frame. And what this tells us is what happened between the buyers and the sellers right here. Now, obviously, and of course in hindsight, very clear, this was absorption up here. The buyers are here, and I have no buyers above here. The volume is there. This fractal operates, and we had an interesting conversation this morning in the Trader Lab chat, and you're all welcome to that. There's no cost to become part of the Bookmap Discord Trader Lab community, about VPOCs, or high volume migration. And the thing to understand is volume tells a story in the sense of shopping. Think of it, trading is like being a good shopper. Whoop, wrong thing. Let me throw something else over here. So this is a high volume node. And what it tells us is the high volume was here. This is passive selling, which you don't know. This is aggressive buying, and that is made up of stops and aggressors, market orders, in other words, and stops become market orders. Passive is here, you don't know. But when the seller is here, and we're below the volume here, and we're below this buyer here, that suggests downside rotation. So that gets me going, okay, now we're going to come out potentially under here. So I'm now thinking to myself, well, I got to see what happens when we come under here, because we might only rotate down, take out the stops under here, and if I find buying, then mean revert back and go for my stats and possibly take out the opening swing high. So I'm going to label this opening swing high also, because it's possible. Hold on, I'm minding our position. Okay. That we're going to come back and squeeze these guys out and get to that ETH high, and maybe even yesterday's, not ETH, yeah, ETH high, take out the opening swing high because there's buy stops up here. Anybody who sold this leg, and then overnight high, yesterday's high. So that's my plan. And of course, in hindsight, it maybe a better plan would have been better, but that's just what we do. So here I get VPOC migration, which means I have more volume here than I have down here. So I'm going to label this, and this is a process that I've shared. And in TraderLab, what we're trying to do with this process is identify shopping. So if this is high volume and it becomes too low, we can revert back to what was too high and possibly cross over. And there's our resistance. So let's just watch it. Right here, I have the opposite of this. I have absorption, and I cross over. So this suggests to me something called mean reversion. So right here, I come down, I see my sellers. I know my buyers were there because of the absorption. The buyers get above these sellers, all these sellers here. So I'm taking a long, okay? So right here, I took a long, and I'm looking to come up here. I come up here, micro high volume structure. I scale always ahead by a couple ticks, and I'm looking for it to come out the top, get taken out. Okay, so that's my first trade. You know, am I proud of it? I don't know. I just follow my plan. I guess I'm proud of that. Now I have another micro high volume structure here. Kind of losing it here. Hold on. So I see my sellers here, my buyers are here. So what did I do? I got long against support, and I scaled ahead of what I perceived to be resistance. I come down here. I got taken out, okay? I come down here. I see a buying structure. It is here and here. I take another long. And I'm saying to myself, okay, you know, no problem. Get long. Where do I have to scale? Back ahead of this. Same place. Same place. And I posted in TraderLab that if we can come across, we're going to get these guys. So then I'm still working the longs for this and maybe out the high because of the statistics, 69%-ish probability. Past performance not indicative of future results. You got to bet it. So I'm looking for this because why? Buy stops right above here. And then here and maybe yesterday's high. So notice where I come. Scale. Okay, let's go, right? On the gravy train. Look where we are. This is resistance. And I know there was an interesting question this morning. I want to go back to that because I think it's very important to understand market mechanics. Now, it's not saying that anybody should do what I do. I'm not suggesting that. You know, some days I think maybe doing what somebody else does might be better than what I do. And then other days, that's just trading. You have a plan, it has an edge, and it's random in the outcome. So again, scale, and no bueno, get taken out again. So now I'm going, well, this is this is not working so well, the longs, because I'm seeing in the order flow that I'm getting my selling up here. So a bit perplexed about it. But now remember my statistics. If I can't get back here, and we certainly gave with, what's the term, the college try, and we can't get over this, and I break out again, making a lower low, and I couldn't take out the stops here, this suggests to me south. Now that puts all of this on the hip rate and the ETH low. Now, the statistics favored the upside, but don't forget what happened yesterday. Market is long. So anybody who's long, once we fail here, including moi, time to turn the barge around. So now I'm looking for shorts. And I go, okay, you're backwards on this thing. So now I'm looking for shorts. So now, how do I get short here? What do I know? I know this because I'm leaving it. That is too high, and now this is the retail price. I'm going to label it. Now, remember where support was. It's down here. So I'm looking at this, which was my support over here, where the highest volume was, and I'm going, well, if I come back here after failing here, then I want to look at it. And I have my mid and VWAP, and I have this as my current retail price. And I'm going to label this. So I've got a couple of locations in different time frames here as you think of them. I don't think of time because the behavior is not time-based. It's really just auction-based. In other words, what happened here in this little microstructure is the basis for that, and that test. You see, it is material if you understand or consider how the market works. So we come up here. This is the retail price. And what I'm thinking of is this is mean reversion now. So if I come outside or here, either one, I know I can get short anywhere in here, and my stop has to be above this. And I also think, are we willing to take a stop when we put a trade on? The answer has to be yes, because we can't avoid it. It's just the way it works. Where do we come? Here. You guys see something here that's consistent? It's the auction. So I'm looking here. I come back outside. Now, right here, I'm thinking there's no way. In fact, I got to look at my trading. Hold on a second. I got to look over here. I took another long here. I think I took 3 of them. And again, scale here. And I was very confident, which of course has nothing to do with the outcome of a trade. I'm saying these guys up here, there's got to be a bazillion buy stops here. The least you can do is pop the opening swing high. I always put low here. I don't know why. Opening swing high and take it out and then maybe come in or not. Didn't do it. So scale again. So here's the absorption. Same place. Absorption. Buyers are here. Buyers are here. Buyers are here. Break. High volume node. The long is here to here, or here to there, through there. So that was my last long. That was the last one. And then this is what I meant to be talking about. And then the break. So once I break and hit this, then it's, okay, is this too low? And then it's going to be either a short out of here or a retracement. And I see the buying here and I see buying icebergs. And I'm thinking, okay, if we can get below this area or I get a retracement, I want to sell. Why? Because I have over a 90% probability of taking out either the ETH high or low. What do I have open? ETH low. So I want to get short. This now is too high, and this, which was over here, becomes too low. Now, I know on this one, but the thing that changes it for me is what we couldn't do. We couldn't take out the opening swing high, and this was my resistance. So this is how I use the migration of the volume. It's a subtlety and it's a nuance. It takes a lot of time and understanding to read a foreign language. It is not mechanical. It is informational. So a lot of traders in Trader Lab, this takes the time to get to understand what's going on with this. And it's not that anybody should do anything with it, because like everything in trading, it's not black and white. It is degrees of maybe. So maybe this is too high, and maybe this resistance here is too high. So I come back. I'm looking for the short. This is my preferential location because this is too high. This is shifted down. I come back here. I see selling icebergs. I know this is too high, and I see this break. I put a short on, and then I'm looking to come here. So now I'm on the short side. I'm going, well, that was fun. And there's more. So if I'm on the short side now, there's more. I'm just going to give you some targeting. I'm going for, there's a gap here and yesterday's low. Remember the stat I gave you at the top of the stream? There's about an 81% probability-ish, which you must vet for yourself, that we take this out, we have a gap, and the next target below after that is this. This was the retail price from the previous day. So the possibility is get under here, fill the gap, test this. So this is our outside target at the moment. Not a recommendation, just one of those things. I got to move on my position. I'm managing a position here. I got to pay attention. Okay. So now we have another structured trade that sets up, and these are structured trades. In other words, these are available in Trader Lab. And the idea of Trader Lab is I have basically donated structured trades to the Trader Lab participants and community that I've used and developed over many, many years. And I don't want to say that they're basic, because they are advanced in what it takes to understand how they work. It's not indicator based. I don't use indicators. I use order flow and the volume as a quote way to see inside the behavior, and also statistics. And to me, trading, at least from what I've found, is a statistically based business. So here's your ETH low. This is the target. So you'd have your short, you'd have your scale, and then you're going for the probability of taking out yesterday's low, filling the gap, and going to that target below. Now, the next structured trade happens at 9:30 Central Time. And actually at 9 a.m., whichever high or low we take out, and here's the 9 a.m. low right here, it's called the IB30. If we clear this, then there's a high probability of taking out the first hour's low. And let me give you a statistic on that. 97% probability of taking out either the first hour's high or low. Pick one. Well, since we didn't take out that opening swing high, I think we can say it's a reasonable bet to take this out and go south of the border. So I'm going to show you now another trade. So if you got short anywhere or you were not short, you have choices. You can continue to be taking shorts if you have a structured trade for it, anticipating taking out wherever this first hour's low is because of the probabilities, or there is a structured trade called the IB continuation trade. So it's subject to your plan. You could be, once this 9 a.m. low which is here, I believe. I have to look. Yeah, that's it. Is taken out. Any of these shorts are on the hit parade. Any of these. Short here. Actually, we didn't take it out to here. So short here. This is a technical short in the Trader Lab, micro high volume structure. Let's look at the structure. I'm going to take you into fractals. So when I discuss volume points of control, and I'm kind of focusing on this today because it's important for traders to understand what they see and to interpret it, not to get mechanical, because the market is not a mechanical process. It is a participant-based process. And those participants leave hints and footprints. Now, we see it in order flow, but we can see it in volume. And when they come together, the volume gives us a structure to lean on. That's why it's so important. So when I'm discussing VPOC migration, I'm discussing the behavior in fractals because it's all the same. This yellow line is the highest volume in the current developing time frame at this time, right here. Inside of the microstructures, which are still auctions, think of your down the street neighborhood store. There's also an auction in here. The volume that's created between these participants, and here's absorption. You got buying icebergs absorbing the sellers. Up here, you've got selling icebergs absorbing the buyers. This is a contested area. Inside it is this volume. If I understand this might be too high because my sellers were here, my buyers took a shot on goal here, there they are, sellers are here. These sellers were absorbed, there's the absorption. But where's my sellers up here? They're in control up this level. So right here, this guy is absorbed. Now, I don't know until I see the sellers below him. Buyers are here, sellers are here. Sellers are here, passive. Buyers are here. What I need is, if this is going higher, for it to get over here. Doesn't do it. Sellers are here, sellers are here, sellers are here, buyers are here. Sellers are here, volume is here. Sellers are below. This guy's stuck, this guy's stuck, this buyer is stuck, sellers are below. Buyers come up here for oxygen. Micro high volume structure, they're hit with selling icebergs. There's the absorption. Buyers are trying here. This is very contested. But what do I have going for me? You do remember, I have the first hour stat, high probability. Now, I don't know where that's going to be. I know I can be getting short, and I have targets below. And another structured trade if it sets up. So right here is the first hour's low. I have that high probability. So short over here, looking for the first hour. So this becomes a skip, and I don't know where this is going to be. Okay. So this is a structured trade, and I consider it advanced, but it is a advanced structured trade in Traderland. Now let's assume you don't get short here working this 1 hour statistic. So what do you do? How about here? Let me show you the next structured trade. Now, this is more, I call these bread and butter trades. And in the Trader Lab, what I share is structured trades. Now, part of understanding structured trades is once you can vet and understand market mechanics using structured trades that you can reverse engineer, and I give them away. There's 60 PDFs of them. And there's no secret sauce, there's no holy grail. It just doesn't exist. What does exist is language and interpreting and understanding market mechanics, how the market works, and then we get inside this to try to look at the structure. Let's look at the structure here. So the IB, so this is here. If you took this, if not, no biggie. You're hanging out, working on your crochet until you get your next structured trade. It's right here. So let's look. What happened here? Sweep. High volume is here. It is sellers. I'm going to label it. Now, I'm using the same concepts as the volume point of control, or the volume migration, as I call it. sellers are here, sellers are there, buyers are here, the sellers are here, the passive seller is here. What do I see here? Nada. Now, I don't know. I'm now below that buyer. That says south of the border. Where's my volume? It's there. So my volume is here, too high. I break here. Where's my volume in here? It's right here. This is very nuanced, and I consider it an advanced process. I pull back. Now, I have a short setup here. You guys think of setups, I just think of them as structured trades. And the reason I call them a structured trade is because it requires structure and order flow. So my buyers are here, my sellers are here, my passive side is here. If I come up here and I can't get above it, sellers are still in control. Now my structured trade sits under here. Now you could be selling any of this. It's all up to you and your trade plan. So my volume is here, my volume is here. In alignment. Let's watch. So here, and I'm looking for the pullback to get short. I have volume there, and I have volume here. So the way I look at this, and it's again, it's interpretation and it's language. This is a foreign language. So if in this, at least what I do, since I don't use indicators, I'm here. I'm here. I'm here. I can't use an indicator because they're too late, they're too far behind. And if I'm using multiple time frames or multiple indicators, there's a high probability of consistent conflict, which creates thrashing and ambiguity. Casinos operate with vetted statistical edges. There's no ambiguity. They just play the game exactly the same way. So I have to do what I do exactly the same way. So here's what I know. I'm looking for the short here. So I break low. My sellers are definitely in control. This is where I want to get short. So where's my resistance? It's here, here, because I didn't get above it, and out here. So any place I want to get short here, my stop is going to be out. And usually 3 points, 3.5 is my maximum stop. Here's the IB. So where's my resistance? It's here, 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 here. Let's watch the behavior. Structured trade in the Trader Lab. Trader Lab, I got to ask you guys, did anyone in the Trader Lab take the IB continuation trade? So this is another short. This is a structured trade. Now, let's watch. So where are we trying to go with this thing? You're asking. This is next target, the gap, and as I already mentioned, I just want you to remember this in case you're late to the stream, this. And, you know, there might be more, but, oops, you're not supposed to be there. This is the primary target for me. This and this is sort of a tertiary deal, but if we can fill the gap, we might get here. And then my trade would be done, not necessarily for the day, but that's my primary trade. So let's continue along because there's more. And there's more opportunity and, of course, risk. So now my IB is here. You'd be beyond risk neutral, right? You'd be hanging out here working on your crochet because of the statistics. What was that statistic you asked again? I have to remind you because this is what Trader Lab is built on. Probabilities and randomness, which is, you all have that. There's an 81%-ish probability we take out this. And then you got the gap. You've heard of filling the gap. What's under yesterday's low? Sell stops, fuel. What does the market do? Tends to go up, to go down, and goes down to go up. So let's watch. What is this? Micro structure. I'm going to mark it. Now, I don't know. Hindsight, right? So, and I'm going for this. So all I have in my plan is shorts and ads if I get them. Let's look. VPOC migration. VPOC migration And I might even actually, I don't know if I'm going to keep this stream public, but I might just call it trading the VPOC or VPOC migration. What is it? What do you guys think? You can answer me in TraderLab. Resistance is here. Selling absorption is here. Volume point of control is here. Now, there's two things that can happen with VPOC migration, and traders need to understand this. If this is the new retail price, we can push off one piece. The other part of it is if we don't push off and we push up, then we can come outside. It's called mean reversion. There's always possibilities. And it could also be the low of the day. But because of this and the gap, to me, I'm just taking shorts. That's it. Let's look at the location. So if I come outside, and where's my volume? It's there. This is an auction in fractals. I trade in multiple time frames, as you think of them, but I don't use the clock. I use what I call fractals. And think of Russian dolls. You know, they're inside each other. This is the developing daily time frame. It's the highest volume at the moment for the day. Up here is the micro time frame. If this becomes too high, which it was over there, and I see my sellers, the possibility is to come back here. Think of it like shopping. I'm not paying that. Then where's the fair price? It's here. And then, you know, whatever. So let's look at it. Notice the behavior. This is the target. This is a short in the TraderLab. TraderLab, did you guys participate in this? And this is called mean reversion. How are we doing in TraderLab? How are we doing in YouTube? Any questions? By the way, YouTube, please give a like and a thumb up. Oh, here we are. So I'm now current, and if you have questions, please post them. I'll do my best. So right now, what are we doing? Mean reversion. Stops are sitting here. This is where trade management comes in. What do we know? Stops are here, here, here. Now, there's another trade in the TraderLab. I'm going to give it to you, and it's not a trade recommendation. It's called VWAP or mid back here. So what we know is there's sellers here. They are absorbed. Why? Sellers, buyers are here. Buyers are above these sellers. That suggests counter rotation. Now, you have choices, but it's all based on your plan. You can either exit your trade, trail a stop, and get taken out, whatever. This is trading, and prepare for your next opportunity, which might be up here. So let's observe it. None of these are trade recommendations. You don't need to take my stops. And yeah, I take stops. Come on, let's get real. I mean, if you go to these chat rooms and wherever you go, and there's some quote guru who just seems never to take a stop, then they're not real. I take them. I have days where I do hit my loss limit. And if I hit it, I just don't trade. I get annoyed, of course, because of my emotional responses, but that's trading. I just take it in stride. I've been trading almost 45 years, or 45. I have to look it up, but I think it's 45, or will be early next year. So I'm not saying the emotional response changes, but the acceptance of the business you're in needs to change. To understand this is like gaming, and the casinos do pay to gamblers. Now, the casinos have a lot of cash, right? And they play a lot of games at a lot of tables. So over the large sample size, not only of the random distribution of outcomes for the games. So don't forget, we're sitting short here. Support is here. I'm going to put a line over it for us so we don't forget. Now, when I'm trading, I also do some of this, because what scrolls off the chart, I'm not going to remember. You know, I'm just out of sight, out of mind. You've heard that. Outside edge is out here. This is called a low volume node. I'm going to label it because a distribution, you notice how the volume tapers up here? So out here is an area, not only is there stops, but we had our sellers. So there's buy stops at the outside edge. So if I come up here, this is a short, and we're still going for this. Just letting you know. So in the Trader Lab, subject to your trade plan, I'm only talking about mine here. And you guys, what often happens in Trader Lab, traders take what they take the pieces that they can relate to and they reverse engineer it and find what they relate to. It's not about replicating what I do. Absolutely not. It's about furthering your understanding of how the market works, why it does what it does, and how you can wean yourself off backwards looking indicators to maybe have more timely execution by using order flow and understanding why. You know, why? Why did this stop here? Because there's absorption here, and I can see that in the order flow. What I can't see is the future. So we're all in that boat, right? But here's what I know. Outside edge, and if I rotate up here and squeeze these guys out, I got another trade here, back to here, out the bottom. That's what is having a trade plan. And again, I don't know if it'll ever get there, not my job. But I do know if it does get there, that my job is going to be to look at the order flow in this area and take a short back to here, going for out the bottom. Would that help your trading to know where your next trade is? Just a question. What do you think? And please give a thumb up in YouTube. Sandor, that's a good question. And Ollie says that. Let me answer Ollie's question. How to spot real versus fake liquidity? There's no way to know. Because the fact that liquidity is in here, which is basically what you're seeing is the limit order book and algorithmic behavior. You're seeing, you know, this is a bracketing algo. It's noise. But when somebody puts liquidity, they can pull. And what it does is, if somebody puts liquidity in the book, it has a tendency to skew the book or put pressure because we can all see it. So when traders see liquidity jump in, it can either be pressure, and then if the market comes up to it, they can pull. Depending on their objective, and this is, you know, all of this is random. So there's certain things I think in trading that you can kind of lean on, and there's other things are suspicious. Suppose somebody drops 500 contracts right above this high. What's going to happen? Skew the book. Now, suppose there's an algo waiting down here to buy when the sellers run away from that liquidity and the book gets skewed and they're accumulating. Then they pull up here and then they open the hatch for the market to go higher and they flip here. In fact, I have an example of that in the PDF. So just show you what that looks like. And by the way, these are available to everyone in the Bookmap Discord Trader Lab community. These are almost 5 years old. And there's 60 of them. Let me see if I can find this one for you. There. You see this? Now, I was sitting short. These are live trades for me. And some are screenshots. But this is bracketing. So what did this guy do? He came in here, and he bracketed. Now, it's not exactly what I'm talking about, but this wasn't real. So what happens here is the buyers are here. Now, this was down here. This came in, and this came in. So I'm looking at this, and I'm going, what's going to happen here? All of a sudden, notice how the liquidity comes in here. They raised it here. This skewed the book, and they pulled it here. That opened it up. I got out here, and the market exploded after that. I just wanted you to see that. I hope that helps you. And don't forget, you guys can all download these if you're inclined. No charge, and there is a link in the bottom of YouTube, and there's no cost to become part of the Bookmap Discord Trader Lab community. So what's going on here? Nothing. So the short, we're just sitting short, guys. from the IB, or you're using mean reversion. So there's multiple trades here in the Trader Lab. There's just a short and you're hanging out, or this is a short back to here. These are multiple structured trades. You could learn these, but here's the key to learning a structured trade. They are not mechanical. Most of us who are indicator oriented, it's a red light, green light, plug and play. And I'm going to suggest, and of course you might be the exception, that's not what this business is. It doesn't work that way. Otherwise, retail traders would all have ATMs in the basement. And they don't. You got to ask yourself why. And most retail traders embark on a quest of the right mix of indicators and timeframes. If that's you and you keep waking up at the same place, I call it Trader Groundhog Day. That was me. You know, when you're doing this 45 years, you kind of go down the same paths you guys are going down. I've already done it. Doesn't mean I've done everything, but I've done a lot of stuff, you know, and stuff that I created on my own, obviously, derivatives. I shared an office with George Lane in the early 1980s. He created stochastics. I thought that was the holy grail. Oscillators. Look at that. It crossed over and the market went up. Well, okay. Oh, RSI. And before there was Keltner channels, there was Bollinger Bands. Fibonacci. Oh, my God. Elliott Wave. Gann. I don't even remember. And then trading systems. I have binders and binders and binders, like encyclopedias, if you guys remember what those were. And, I mean, bookshelves of research and aha moments and excitement followed by disappointment. Because everything works at times. That's the random nature, and that's what keeps us chasing potentially ghosts. And you can spend years chasing ghosts. I did. In spite of everything. And in spite of having runs of winning trades, which is what keeps you doing something and thinking it's just improving. Now, that might not be your experience, but it was mine. But unfortunately, it took me a long time to recognize the fallacy of what I was doing, because I would see what I thought was improvement. But I would see it break down. Then I tried to systematize it, which meant more indicators and optimization. So I thought, I got you now. Now, when I was doing all this, there was no day trading. All my buddies, you know, quote, day traders were down, you know, scalpers, they were all down on the floor. Those were my buddies. I started out as an off-floor trader with the idea of getting enough dollars together to get a seat at the CME. But what happened was I kept working on the craft, and I started seeing behavior very slowly. And I started thinking that maybe I can do this and not go down on the floor, but instead become a money manager. So I kind of changed what I was doing and what my objectives were. So anyway, it's a little out of sequence here, but I started out, and then I became a manager. And I had my own firm. I managed a substantial amount of dollars over the years. I systematized it and was trend following and swing trading. So it became a different animal. So different. Now remember, if we come out here, we already have a short lined up, right? And that would be a mean reversion trade. It's not a recommendation. And when you have a trade plan, you're not sitting here impulsing in, oh, I'm going to miss it. Or is this the right spot? Where's the right location? Don't we all wish we knew? What do I know? I know there's stops here. And what do I know? I know this is an outside edge, and I know the buy stops can be out here, VWAP and mid. So this is my next location to come here and to fall out the bottom. That's all I know. And again, it's all random, and it's not a recommendation. So if you're using order flow, remember, you've got some choices to make. You could sit through all this because of statistics, right? Remember, high probability of taking out either the high or low, yesterday's high or low. And I don't know about you, I'm kind of inclined to this, but that's up to you. So as long as I have a statistic, then I'm leaning here. So I'm going to keep trading the short side unless there's a major change. So, and the market goes up to go down, and the market goes down to go up. So we're short, we're hanging out. That's it. If we get up here, it's an ad or a initiative trade, but you have to, it's nuanced and there will be stops here. We also have stops above the mid, so that's why this is an area. So no matter what happens up in here, this is important. So we're just hanging out. Do you guys have questions? I have one more to answer here. Sardar is asking me in YouTube, do we take mid VWAP to VPOC trades only in trend days? They work better in trend days if you're in a rotational configuration. And this is, if we're in balance, which we're not, typically what happens is the VWAP, the VPOC, and the mid are very close to each other. And then it's just mean reversion trading. I tend to ignore these as far as locations, unless we're in a directional move. So, no. To answer your question, no. If this is a trending day, it's directional, sellers are in control, then this for me, and the VPOC is below, then this is a structured trade that's qualified. The other thing that traders need to learn, and again, all this takes time. This is not a 4-week event and all of a sudden you've got the ATM in the basement. Wouldn't it be nice? But no, it doesn't work that way. This is a trading at a high level, in my opinion, because you're going to differentiate yourself in your understanding of what other retail traders are doing. And by being different in your approach may create a different outcome. The other part of this is the whole business is based on statistics. When you have structured trades and you know where these trades are going to show up, you can then go back and research them, seeing the similar configurations, triggers, trade management, targeting, scaling, the rest of it. Put it all together and then create statistics and then know you actually have an edge. When you have an edge, it's tangible. You can see it. It has metrics. When you have metrics, it gives you the ability to better manage your emotional state, which is fight and flight, fear, hesitation, I'm getting out of here, that kind of thing, because we're wired for that. Those emotions work great in, let's call it the outside world, but it is the exact opposite in the trading world. The trading world is running into the burning building, accepting risk, operating in a completely uncertain environment. That triggers us emotionally to avoid it or to operate under fear. And by the way, every time I put a trade on, there's some fear because of uncertainty. Why wouldn't you be uncertain? So if you are uncertain because you have no control over the outcome, then where's your certainty lie? Your certainty lies in the research you've done that extracts an edge. And then your certainty is over time. If you execute your plan with a vetted statistical edge, you're certain, just like the casinos. And of course, even for you, past performance is not necessarily indicative of future results. It's your results that you're going to extract the dollars from the other participants. That gives you the control over your emotional triggers, which are fight and flight and FOMO and all the rest of the crazy stuff we do. Because, yeah, we all do it. We all do it because of our wiring. So if you cannot control yourself, and if you don't have metrics or statistics, the only thing you have is emotions. How can you manage your emotions if you don't have something tangible? The tangible metrics are what help you. It doesn't stop it from still happening, but it substantially reduces it. You can create a sense of calm or calmness in randomness if you have a tangible metric. That's what the Trader Lab is built on, statistics. If the statistics suggests I'm going to take this out, even though there's no 100% statistic, then I have to, per my plan, only trade shorts to here. Not a recommendation, but why would I get long? And yes, this could be the low of the day, and theoretically we can go wherever. My next trade is out here. If I come here before I take this out, I'm going short. It's not a recommendation. It's just a structured trade. That trade can fail like any other trade. Why? It's random on an individual basis. But statistically, it has an edge. I also, if I come up here, I can short this. So I have this, this is areas to sell, to come back here, assuming it's here at the time, which it probably will be, and fall out the bottom. Is everybody tracking? Your candlestick is saying, oh, by the way, stocks, this is a generic process. What this is really how the market works. And it doesn't matter what you're trading. Stocks, doesn't matter because markets are auction based. They rotate because they're trying to figure out what's too high, what's too low. Trading is shopping. And I know you're probably thinking, oh, it's so complicated. No, it's not complicated. Trading is not complicated. What is complex is operating in randomness and uncertainty. For me, that's what's complicated. Trading is not complicated if you understand how it works. The outcome of the next trade is random. That creates complexity from an emotional stimulus. If that differentiates, because I understand what you're asking, So this process works on anything. But you have to understand how it works. And the other piece of this is you determine the time frame you operate in. You can use, and when I say time frame, I am trading inside of multiple time frames as you think of them. And I use the term fractals, and the way to relate to it is like a Russian doll, the big doll, and then you've got smaller ones going down. These are the little dolls. This is the little doll. Because this is a microstructure. It has high volume right there. It is resistance. In the developing daily time frame, this is the high volume. So the market goes from microstructure, trigger, test, to the higher time frame. Think Russian doll, which is this, and then we come outside. This is a microstructure to come back to the higher time frame. Then if I come outside, this is called mean reversion, is rotational trading. This is a trade plan inside of a trade plan. Again, Russian dolls. So when I talk about VPOC migration, I'm also talking about this in fractals. So when the volume is set here, it creates the break and mean reversion to here, which is setting up the short and the mean reversion to here. Does that make sense, guys? Yeah, candlestick, you've been working on it for 2 years. It took me longer than 2 years. Um, because I kept doing derivatives of a defective process, which I didn't know at the time. I didn't understand at that time statistics. I did understand, and I built systems. I'm trying to remember when I did that. 80, mid 80s. No, when I first started, we didn't have internet. We had no internet. We had no domes, and we had no computers. Basically, if you bought a computer, it was something out of the Stone Age. My first computer was an Apple IIe. George Lane, who created stochastics, he had an Apple I. So that was, the first real PCs that we got, and I started working with that. So that'll give you an idea. I don't think it had any RAM. I can't remember, but it was really not much to it. You had to swap floppy disks, I mean, the big ones. So that's where I was starting. And I also worked with Ralph and Bill Cruz out of Miami with what was a development version of what became eventually TradeStation. So that's how I started building my systems. It was they had an end of day product that was really a beta product before TradeStation was developed. So since I'm not a coder, what attracted me to it was their quote easy language. And there was nothing easy about it because it was still in a development form and a lot of the math functions were not created. So I had to actually write those. There was a lot of brain damage involved. So that's kind of where I was. And because I believed at that time, I did believe in metrics, but I had no way to get them because I was using indicators and then hybrids. I built indicators, and then it would be the math of the indicators, and I layered indicators in multiple time frames. And then if you go and grab a chunk of data, which was very expensive at the time, you couldn't get data, you actually had to buy it. And I started out with 15-minute bars. We didn't have candles, they didn't exist yet, at least not here. So it was open, high, low, close, 15-minute bars. First it was daily, and then I went to quote short time frame, which was 15 minutes, using and quote I won't go into it, but I'll just say that's kind of my background. And I thought that systems, you would grab let's say 30 days of data or 6 weeks of data, go back 30 days, optimize, then 2 weeks of walk forward testing to see if it had an edge. But you're always in the past. It's no different when you guys optimize or curve fit, when you go back to curve fit something so it'll work in the future. You get the same experience as I did. It just didn't work. But it would work enough that it gave me optimism that I just had to make it better. So Trader Groundhog Day was born. Notice what we're doing, right? So we know where our next trades are. And we know where our targeting is. This is what Trader Lab is about. I hope I'm answering your questions. Let's see. Yeah, Sardar, as far as context, it's a moving target. It evolves. This is, right now, we're in two-sided trade, and it's called mean reversion. Now, if we just come back inside here, that sets up something else. But at the moment, we're looking for this. And the context is a evolving process. Remember, I was on the longs early on until it failed, and then I had to turn the barge around. For me, early on, the context was at least up for a statistic. And then when that statistic failed, it put in other words, the ETH high was a high probability statistic. We couldn't get to it. And either the previous day's high low, which you know has a high probability statistic over 80%. And you guys have to vet these for yourself. So if the ETH high failed, and I know that there's over a 90% probability I take one of them out, which is why I was going for the top one. When that fails, I'm going for this statistically, and I'm going for this. You see, this shapes what I do on a higher time frame basis. Then I have my structured trades. This was the last short that at least structured trade in Trader Lab was here, going for this. And of course, you scale, get risk neutral, do your thing. If you have a trade management process, as I mentioned, you could be out of this thing here or not. And then your stop stays out here and you risk giving the MFV back. Some traders are going to go, I'm okay with that. Me, I lose my breakfast. So I manage my trades. And then if I come outside, which is my next structured trade, I just put the trade back on to go here and get my stat. It's just a different way to approach. Anyway, I hope that answers your question. And this takes time, guys. If you want to, now it's just a personal opinion. I'm only talking about me. If you want to work at a different level than other retail traders, you're going to have to do something different. Think differently, act differently. Do the things they're not willing to do or don't even understand. And that's why Trader Lab is what it is, and why we have traders that are successful traders who were previously not successful. Our senior trader has over 50 years experience. It's not how long you've been doing this. It's what your results are. And if you're coming back, and here's the thing about results, and this is what got me. Imagine you didn't even have a chart in front of you and you push the buy or the sell button randomly. You will have winning trades. What does that tell you about what you're doing now? So it's not about the winning trades. It's about consistency of process, metrics, and understanding market mechanics. Now remember where the stops are. They're up here. And this is resistance. So you have choices. Now for me, if I'm not hanging out here, I have to wait because I want, now what I want, the market could care less. The stops are sitting here. If I get short here, it might only come back here or just rotate because the support, don't forget, is here and squeeze me out. So the VWAP to VPOC or mid or even up here to here is a good trade for me. Not saying I wouldn't take this, but that's me. In other words, what I've done for myself over years now, don't forget, not weeks, not months, is understand microstructure. So when I'm talking about reversion trading, I'm talking the same thing in the fractal. This is a reversion back here. So I got a reversion to this high volume. And if this is actually a short, and I'm not saying it is, this is reversion. This is like upside down. If you want to think about it, I'm trading reversion to reversion. Is this too advanced or is it logical? What do you guys think? Um, Dylan, you don't see out stats in form entries? They don't. Market mechanics and participant behavior is what gives us the entries. Statistics give us the probabilities of which way the market might go. But that does not, because there's, like today, the higher probability was the ETH high. One of the reasons I was going for it. It had a 69% probability. The ETH low had a 49% probability. What did we do? We took out the ETH low. Statistics don't exist in the vacuum. They just give us something that helps create edge. We still take stops and everything else, you know. But if now we never have to take out yesterday's low, in spite of the probability that there's, I always keep losing these things, almost an 82% probability that we will. We never have to do it. It's not 100%. But if I have an 82% probability and the market is long with sell stops below here, that's a pretty juicy target. And we never have to get there. So unless the short side falls apart, I'm only on shorts. Now I'm looking at market structure. I'm below here, which was my last structured trade. If I come out, remember, low volume node, and I can come anywhere up in here. If I see a short, which means microstructure with a test, notice the micro high volume. Let's just look at this. I'm just taking you inside a fractal, guys, so we can talk. That's a fractal. It comes from over there. That's why I put these lines. I have my buyers here. I have a selling iceberg, and I'm at resistance in the fractal. My sellers take over here. I test the volume right there, which means I'm testing my sellers and these passive sellers. And right here, now this is not a structured trade. This is a reading of the tea leaves. Then this. If I squeeze above here, don't forget the structured trade is out here. Okay? So this is more scalpy. I don't scalp. But the focus of this stream is to help you guys understand how the market works, why it does what it does, how you might get an alignment. Now, if I took a short here, I'm trying to go here. Now, do I have enough range? Maybe. Do you? And where would I enter? I'd be entering here with a stop here. Look at that risk. Does that fit? Can you read this? Are you guys tracking? This is Trader Lab. How are we doing in YouTube? And how are we doing there in... By the way, guys, if you're getting something from this, please give a like and a thumb up. Also, I want to remind you all, you are all invited to the Bookmap Discord Trader Lab community. There's no cost. And you can join a community of like-minded traders, all different approaches and thoughts and ideas, and find what other traders are doing that might be different than what you're doing. And of course, if what you're doing has an edge and you are a consistent, profitable trader, don't keep it a secret. Come on over to Trader Lab. Sure. And no matter what you're doing, you can probably improve in Trader Lab, because I don't think there's too many folks out there who are doing this. When I started doing this, nobody was doing it. And in fact, I learned the original market profile from Peter Stottlemeyer. It was licensed by CBOT in the maybe mid 80s somewhere. And I actually paid big bucks, real money, not like what our money is today, real money, to take a 3-day class with him. And there weren't too many of us in there, because when you look at a market profile, it's like you landed on Mars. Can you guys see why this would be a short? And you can enter here in the micro with a stop here. Is if that's called risk reward, and this is mean reversion, I now have a risk-free trade, and I don't call trades. I remember what I said. This is a advanced trade. All I'm doing is trading Russian dolls. And I'm still looking to fall out the bottom, which it may never do. But here's the thing. If I take this short here, which is the entry, this is a structured trigger in the Trader Lab. You can learn this. And I'm risk neutral. I have now given myself a ticket to ride with the potential risk reward down to here. What do you guys think? And it's not a recommendation because I have no clue. But I'm working right now roughly over a 8-point trade with a 1.5 risk and being risk neutral. Do you think that might help you? I'm just asking, because that's what we do in Trader Lab. And unlike others, I'm not a vendor. I'm just like you. The only difference between you and me is I've got 45 years of this, give or take a few months. And I've been down your path. And I didn't know for years that what I believed, this is the thing, beliefs, that what I believed was defective. So I kept doing derivatives of a process that was actually a defective process. But because I had intermittent success with it, I kept thinking it was just make it better. Right? That's logical. But if you think back, and this is maybe a poor analogy, we all thought not us, but previously, that everybody thought the earth was flat. They believed it. So they wouldn't explore or go on a voyage because they thought they'd fall off the end of the earth, right? We all have read about that. We know that. But they believed it. So they wouldn't go and explore. Some got brave and they said, well, maybe not. Let's see. They were the explorers. They took a chance because they had a different belief. And they were willing to fall off the earth to find out. Trading is kind of like that. Do you believe in what you're doing? And are you actually believing in something that maybe is defective, but you don't know it? I know for me, it was very hard to change my beliefs because of the intermittent reinforcement of what I was doing, because I had runs. I would I'd be profitable, and then I'd watch it break down. So my thing was to keep optimizing when I built systems. What worked with systems to a point was I was a trend follower. And the only thing I was a swing trader on was S&Ps, the big ones. We didn't have the little ones, no, the minis, and certainly didn't have any micro. So I traded the large S&Ps. So that's what I did for years. And currencies primarily, because those are trending markets. And spreads, currency spreads, before we had pairs. So you'd actually have to buy, sell, CME, you'd spread them. So that was kind of what my niche became. Can you guys see the logic of why this might be a short? Again, I consider this advanced only because traders have to understand market mechanics at a nuanced level. The structured trade, the last one was this. The next one would be out here, right? Which I've already been mentioning. But why would I be taking shorts? Because of this. Stops, gap. The stops are in here under yesterday's low. And I anticipate, not predict, that we're going to get here and then maybe to here. So my targeting on all of these is out here. My current shorts is this. Doesn't mean I won't get out sooner. It doesn't mean if I get a rotation that I won't cover and put the trade back out again. It's all a function of trade plan. This is a short for me. This is, and I add and scale. Now it's advanced. I don't, it's not anything I recommend because it's a different level, but it's not different in the sense of the basic mechanics of market behavior. That's why I can sell this and go to this, because it's fractal. Russian dolls. And then, your helmet's on and you work on your crochet. Questions, guys? Please give a thumb up in YouTube. How are you guys doing in YouTube? If you're interested in Trader Lab, remember there's no cost, and you can use the link in the bottom of YouTube to come to the Bookmap Discord Trader Lab community. Download the 60 PDFs of these structured trades and start vetting. Now, where's support? It's here. Why might it be support? Let's look at the other side. Because the sellers were here. The sellers were here. The passive buyers are here. Who knows? Break high. What is this? Support. So where's another area to potentially scale? Here. Let's see what it does. And why is this a short? The volume is there. Why is this potentially support? The volume right there is there. So we can do this, to this, to this, to this, and squeeze. That's why, the market could do anything. So, but I know the statistics favor this. So as long as the structure is intact, and I don't know if we squeeze, which of course, remember, there's stops here, and I come up above, whatever, then I just put the trade back out again. If I'm managing here, I've already got dollars in the hopper. If I get below here, there we are. If I bounce off of here, I'm coming here, and then maybe squeeze out. This is what I know. I don't predict, but that's what I know. And the reason I know it, not what will happen, what might happen, is what happened here. See all these sellers? See the buyers here? It was only a squeeze, maybe. So that's my short. That's my entry. There's my stop. You saw it in real time. This is the mean. And I come under here. I'm back going for my 60 down below. Right? So that's as deep as this is. Can you do this? Can you learn this? I'm going to say, come to Trader Lab, join other traders who are doing this exact process, or derivatives of it. There's not one way to do this. Just because I don't use indicators. The reason I don't use them is because I want consistency on my part. I don't want ambiguity and conflict. What I found for me when I was using indicators was you could have, and they lagged. So I wouldn't be able to get short here. I'd probably be getting short over here by the time something did something. Um, so, and would I know why I'd be getting short here? How? I don't know. I can't answer it because it never worked for me, so I don't use them. What this is language. So if you've ever tried to learn a foreign language, that's what this is. It's foreign to you because you've used Google Translate or Indicator to be your translator. Fine. But do you want to speak the language or do you want to keep using conflicting translators? And that's kind of how I visualize it. So I threw away, I said, oh, I better learn to speak the language because now when I incorporate order flow, I have much more timely execution and risk management. If I can enter better and I only have this, then I can actually take this trade. If I'm entering wherever, I can't take this trade because I can't get risk neutral because this is the mean. It changed everything for me. I could have my stop here. I could be entering here. What is that? 6 ticks? And I got enough range for here. That's almost 5 points for my scale. 6 ticks on, let's call it a 2 lot, which is the minimum configuration in a trader lab. Not 1, 2. Job of the first one is to get risk neutral, which is here. Stop is there. You don't move your stop unless it's part of your plan. Now you got a few burgers in the basket, some fries, and you're holding. Then your choice is trade management, subject to your plan, or you don't move your stop and you just hang out and you need to clear this and then off you go. It's not more complicated than that. It is random. There. By the way, not only can you visit the Trader Lab in YouTube there, that link down there, you do need to verify your username and email so we know you're not spam. Keep the riffraff out. Trader Lab's a serious community. It's about the business of trading. It's not romper room. I like to say that because I know some of these chats out on Discord are just abhorrent to me. Also, there's no cost. Nobody's going to sell you, quote, a subscription to the Trader Lab. I give my time. I share all my experience. I share structured trades. I'm an educator, but I'm not in this for the dollars. I'm in this because of what I went through. I know statistically retail traders have an abysmal success rate, and there's good reasons for it. If you can avoid some of that or become a successful trader, then it fulfills my motivation. There was nobody when I was learning the trade. I was alone. There were no off-floor traders, at least that I was aware of. You had to be a floor trader, or you picked up the way I would place my orders. I'd pick up the phone, call my guy on the floor, and they'd stand on the side of the pit, as you know, hand signal it in. I get my fill back while I was holding because I did volume. That was it. You wrote your orders on a piece of paper and time stamped them. That was the business. So that's where I started. And technical indicators were new. Wells Wilder, sure you're all familiar with him. It was all new. It didn't exist previously. I did my charts by hand. I'm not trying to tell you, that, I had an abacus and a stone tablet, but I'm trying to give you a sense that I really went from basic classical bar charting, measure moves, standard stuff, head and shoulders, all this kind of stuff, pennants, triangles. And that's what I learned. And I learned that at CME. So that's kind of a bit about me. And then eventually I had my own firm, managed dollars, went from there. And there's a lot more. But that's, this is all ancient history. It's the struggle, and the motivation, and not giving up, and definitely getting despondent at times, feeling that there's just no way this is not going to work. Market profile, when I learned that from the creator of it, I thought I found something really good. and I made a mess out of it because I got smart and I put it together with my indicators. So I threw another couple of years of pandemonium into my life that wasn't necessary because I couldn't let go of what I, quote, believed in. When you spend years doing something, there's a certain sense of this, and you've heard this, at least I got something out of it. Well, when I actually got rid of my indicators, and it took a while for me to wean myself off them, that's what I got out of it. The courage to let go of my beliefs that the world was, the planet was not flat. But I had to have the courage to let go of my beliefs. And it was, you spend years doing something, and definitely to learn to trade, you will be spending years. If you're not willing to invest in a career and learn a business, then you probably should do something else. Or if you're going to just gamble, which was what most retail traders do, being influenced by your emotional triggers, which is also another issue for us, go to the casino, get the cocktails and the ticket to the buffet. It'll be more rewarding than doing this without understanding the business, only interacting when you have a statistical edge, and leaving the rest for everybody else. Remember where support is. Here. If I can get under the current low, then we're on to our targets. Please give a thumb up in YouTube, and let me remind you, there's a lot of additional education that's available to everyone at no cost in the Bookmap Discord community. Stocks, options, crypto, order flow with a high tier tool like Bookmap. In fact, if you go to bookmap.com, there is a digital version. You can download it, no cost. Get your hands on it. Comes with data. You can play around with that. Also, if you're a subscriber, that would make you a subscriber to the digital version. And again, at no cost. And then once you're a subscriber, you could actually participate in subscriber exclusive coaching, mentoring, and webinar streams and the rest of it. You might find that interesting. Please give that thumb up. I think if the Trader Lab votes on this and wants this stream made public on trading VPOC migration, I think it's almost like a secret in some ways. I would say most traders do not understand market mechanics and auction market theory and trading in fractals. So maybe this is something we should put in our library and make available. Thanks, everybody. Thanks for visiting Trader Lab today. And if you're interested, come to the Bookmap Discord Trader Lab, download the 60 PDFs of these structured trades. Always share every day with you statistics, and there is a library of webinars. Be sure to watch the primer webinar first. It is about 30,000 or so views. I don't know, but it's about an hour long. It'll give you a high-level overview of what this is all about. And then welcome to the Trader Lab. I look forward to meeting you there. Take care, guys. Look forward to seeing you soon. And thanks, everyone, for visiting and participating in the Trader Lab today. See you tomorrow.